TGIF Warriors, Alexander. Hope you did as well. Hi, Michael, James, Bran. Okay, man's back. Welcome back. Ryan, Mike. Okay, Louise, welcome to Face. So, okay, man, welcome back.
Good morning, Dale. Happy Friday. Good morning, everybody.
Yeah, welcome back, buddy. Hope everything went well. Were you keeping one eye on the market while you were gone?
Half an eye. And
Definitely.
I must say, I was saying in the room this morning, you guys
Like
saw
you
some
did.
volatility, but everything is back where I left it.
Yeah. Yeah, nothing. Yeah, is that something? I mean, not much volatility in euro. I mean, pretty tight range.
Right.
You've been negative on euro. Do you see us breaking down for another leg? I'm looking for 107.
Yeah, I think as for as long as we're like below that 110, 10 and a quarter or so, it's looking like the rallies are sold. I'm a bit more negative euro through some crosses, but because the dollar is really having a hard time making up its mind.
Yeah.
The only thing I noted coming back was even though dollar yen rejected very well above 146, the yen crosses are all a bit higher. That's likely still the market thinking that the Bank of Japan is not going to do anything next week,
Okay.
which is likely the case, barring surprises. And that's about it, really. I mean, it just seems like the FX market has a difficult time trying to take things one way or the other, you know?
Yeah, well, I guess that's what this sideways range is expressing
Mm.
since at least the beginning of the year, right? You
Yep.
know, so
And then you have those occasional spikes in some of the crosses, and then they come back to where we left them before as well. I'm
yeah,
looking
I'm
at
kind of
stuff like,
surprised. I was looking like when we had this spike here yesterday for it to take out the stops over the side. I don't
mm,
think we did 109.98. Oh yeah, it did by a pip. So there's another lesson for having your stops too tight.
right.
One, one pip over a high, and then you get taken out, and then the market's 50 pips lower.
Mm.
So don't do that. Give it a little breathing room for stop hunts for what the algos do. So their algos are the present floor traders. Okay, so they look for liquidity. Yeah, wait, good idea, Bran. So we hit Yemen yesterday and gold popped pretty good.
Yeah.
Silver popped pretty good. But then all of a sudden you get statements from the US, we're not sending in more forces to the Red Sea. And,
And
you know, up until yesterday, gold, I really don't think the gold goes anywhere until this dollar rally ends. And looks like we're not far away from it breaking out this sideways consolidation. Coming into the week, I thought we might, like little A, B, C, maybe
the UK also said that barring anything specific,
else.
they wouldn't send in more
Yeah.
hits. Well, they wouldn't hit more than what they did either. So yeah, it's all. I think gold could remain a bit beat due to uncertainty, but
Yeah,
it's still broadly in the range, right?
yeah. Yeah, I never, when you think about it, the actions or lack of actions or type of actions really seems to me that we're intimidated by Iran because these are the proxies, and we keep saying we don't want, although we have a pretty full plate, right? So uh, I think the biggest fear is it turning into something regional, but it seems like Iran wants it. They're not letting up. They give the orders. So, I guess we're trying to avoid that for as long as possible. Um,
Well, you know what as well, Dale, is that if you bring it back to markets, we may be waiting for what's going to happen on the weekend in
Oh,
Taiwan
Taiwan.
as well.
Yeah,
So, and it could be like, as we were saying, like it's all one big trade. Geopolitics could turn out to be one big trade as well. And perhaps next week, we will have a
yeah,
week of bigger reactions to what could happen on the geopolitical front.
yeah. Here's a headline from Financial Times: China's military warns against Taiwan independence plots.
And the US
Why is the military warning?
and Biden said he wants to send a delegation as well to Taiwan after the elections, right?
I didn't hear that, but
Well, that's
okay,
I mean to have read that somewhere.
okay, all right. So,
Well, and
yeah,
and I was gonna
go
mention
ahead.
good morning, and Kman,
Good
welcome
morning.
back, by the way.
Morning, morning.
Good morning. I don't know the different the parties different designations, but I do know that there are two parties that are pro-China that are running against the current government, which is
Right.
more anti-China. I guess you can just kind of throw it in those two buckets. So it is going to be very interesting what happens this weekend, because it's gonna spark the flames of what's happening of this fire, or bring it down, bring the temperature down a little bit, and the delegation be more welcome with open arms. So I think it is going to be a very interesting weekend on how the market responds.
I think so. I think next week we may see a reaction on the geopolitical side, perhaps, because we will have one
Because
more element, right? And you're right in saying two of the three, the two opposition parties. Well, at least one is very much more pro-China, and the other one is a little bit in the middle, still wants to keep some form of independence, but also a bit more pro.
warmer, right?
Yeah,
Warmer, yeah.
So, speaking about wild action, that was pretty wild action that ended up being kind of a nothing day, a little lower in the S&Ps. I mean, I think this was pretty wild. We sold off and then boom,
Yeah, and
recovered.
a lot of that reversal came, Dale, right
Here,
at the end of the day. Towards it was the
yeah,
30-year auction that went off.
okay, all right,
And it wasn't quite as strong as the previous 2 days. So we saw yield slip, and markets kind of rallied back, and I mean it I think that just gave reason for people to say, oh, we're going to stay range bound, and we ended up just sitting in the range on pretty much everything. So
yeah. I mean, it looked like we could have a decisive day, and I just heard my self-talk going, that damn beach ball.
well,
Huh?
yeah, it's definitely a beach ball. And I do want to say a couple things. We have some earnings that have come out this morning. Ryan, I know you've been kind of looking at some of the headlines that were coming through. And then we also have Nick, who's joining us. Nick's been away for like the last few weeks, so it's nice to have Nick back to show us some of his charts too. So anyway,
Grab a
Ryan,
Hi
honey.
what'd you say, Ryan, about the earnings this morning?
Yeah, earnings a bit. Some people will look at them and see some things bad, but they've been on the whole okay-ish. Some banks like JP Morgan have missed, others have beat. The numbers are still quite, heavy or high. So no one's seeing profits collapse or business collapse or anything like that.
But expectations
Yeah,
have dropped quite dramatically, right?
expectations have dropped a bit, yeah, and there are a few little signals that higher rates are starting to influence what's happening at banks. But yeah, there's been no disasters yet, and I think stocks may take a bit of solace from that, as opposed to feeling the need to crap out. But yeah, it's going to be a big earnings month. We move from the financials through to the rest of the sectors. Your Netflixes, your Googles, your Alphabets, and all that sort of stuff over the course of this month. So yeah, for the financials,
They were
there's
the
a few little
star at
cracks. Yeah,
they were the
exactly.
star of the last quarter.
Last couple of quarters they've been good.
Yeah,
We should be expecting them not to have
they
as
all look
big a
good.
stellar earnings as those last couple of quarters, given what's happening with rate hikes. But it just changes the business model, doesn't it? From you go from a loan situation to a saver situation. So there's going to be some change around in their models and what business they're after. But yeah, on the whole, I don't see any big disasters at the moment.
Island bottom in the FXI. Takes courage to buy China right here, doesn't it?
Yeah, I don't know. I don't know if I'd be. I see
Right
what you're
in front of the
I see what you're
elections.
talking about, but man, that is a pretty steep downtrend that has just not been responsive. Now, there's a speculation there might be some rate cuts over the weekend in China on our holiday, as China comes back online over the weekend, but we'll see. Nick, are you listening?
Good morning,
in?
Blake.
Hey, good morning, Nick. How are you?
Doing pretty good this morning. I'm happy to see where we're at. Where we're at when I woke up. We seem to have pared back a little bit in the equities, and the dollar's back up a little bit. So I'm happy it didn't wake up in the other direction because I took some risk off positions yesterday.
All right. Well, Nick,
Want to
Nick
take the charts, Nick?
Yeah, I
Yeah.
was gonna say, Nick he's probably got some charts he wants to show of there's some of the big names of some of these tech names are really starting to show some weakness. What are you seeing out there, Nick?
Yeah. Well, when you guys were talking about the financial sector, I just took a quick look. This is my XLF chart. I'm just noticing over here we had some spikes, spike lows here, spike low here. There's another level that we bounced from, and we're right around there right now. So that's just something to note. You guys just kind of sparked my interest, so thought I'd point it out really quick. But as far as the tech sector goes, I noticed that the NASDAQ made a lower high, and I'm going to dive through some of the Mag 7s here in a minute. But I felt yesterday, and you can see on the ForexAnalytix website, we printed pretty hot data yesterday, and I took a look at the Fed Watch tool, and it started out, Ryan pointed out in the chat room, at 64.1% of a rate hike or rate cut in March. It jumped up to 74% midday. And I'm sitting there thinking, I'm like, what is this market on that makes it think that two hot CPI, double hot CPI prints are somehow going to encourage the Fed to cut? So I don't know. The market's just acting a little bit goofy. I think you should be aware of that. But I also thought, if we get a weak number tomorrow, the market was probably dying to take out these stops up here. And we didn't, which I find quite significant. I actually took a small short on the data, and it started running up higher. I said, forget it, they're going to blow these stops up here, and they didn't. And I got back in, and I went through and I found a few stats on January. In the S&P 500 performance after a negative Santa Claus rally and a negative first 5 days, typically in January, it's only positive 27.3% of the time. So that's something to note. And also with gains are pretty much common after a 20% year, but so we have early weakness early on. You can see here in January into February, we tend to roll over a little bit. I don't think that data yesterday suggests positive equities, but we all know that the equities have been quite strong, so it's hard to fight against it. But we're getting some data to kind of back it up and consider maybe taking some short risk trades. My trades are small at the moment, but I'm starting to dabble in the idea of it. Taking a look at the VIX, I really want to see the VIX pop up a little bit higher if I'm going to get aggressive equities. We're still on the floor, but it is important to note that we are getting some bullish RSI divergence on the 1 hour. So I'm taking a look at that. And if we can get back above 14, which could happen, especially with this geopolitical risk. When I woke up and I saw both the dollar and gold up, I thought, okay, well, maybe things are heating up. The Red Sea is getting a lot of action right now. But I'll go ahead and dive into some of the. Sorry, go ahead.
I was just going to say, but that a lot of that it was expected, so I think it's as far as where we're at right now, does it get worse, at this point in time? And I don't know, Dale's probably got a lot to say about that too. And I guess we're going to be finding out
Yeah.
over the weekend.
I'm
So,
just noticing that, well, yeah, it was expected, but I guess the main point is things are expanding outside of Israel Hamas territory. So that's just my concern. But I totally agree. Taking a look at some of the Mag 7s, I noticed that Google put in a false breakout of this larger trend line here from all-time highs, another spike high here. We closed below it, and you can see pre-market that we are below it at the moment. Google's had a solid run up really since, the beginning of December. It did pull back a bit, but it's been rallying, and we essentially have a throw over right now. Microsoft, we've been looking at this a lot, you and me, Blake, the last week really, and it broke out of this bullish pennant. It made a move above its all-time highs, and it spiked yesterday, but it looks like right now pre-market we're getting back below it. So these Mag 7s have really been driving a lot, although the NASDAQ the other day was pretty much flat on the day. These Mag 7s have been taking a bit of a hit. Tesla looks extremely ugly to me. I've been showing this trend line for a while now, and it has respected it extremely well, in my opinion. We
now
kept
we're making
saying,
lower lows.
yeah, and we kept saying on the daily roundup, if we get back below 230 or so, things could get ugly, and you can see pre-market we're already at 220. So Tesla's a big one to watch, and I just think it looks pretty weak. And I noticed that retail is a major investor in Tesla. They're not always diving as much into some of the financials, and it could end up sticking them early in the year. NVIDIA. Oh, NVIDIA. What a beast, right?
Right.
But you can see here on the 8-hour, and I also believe on the daily RSI, it's oversold, or I'm sorry, overbought. You can see that when we get overbought on here, you tend to get a little bit of a pullback, Whether it sustains or not, we'll have to, continue to track that. But I think if we get back below 510, that's not going to be good, because that would put NVIDIA back in the range that it's had really since July. And I think that could show some weakness. And I've been also showing this composite chart of all the tech stocks, or I'm sorry, all the Mag 7s put together. I wish I could get rid of that, but
Why don't you
here,
show the weakness, Nick? Apple.
Apple. Yeah, Apple's been unable to close that gap that it had, that it created on the January 2nd.
Yeah, it has
It's also been
barely
rolling over.
hasn't even retraced 38% of the move,
No, it's
close
looked
to it
ugly. Yeah,
compared to everything else you showed.
yeah, it's looked quite ugly. I think the best performing Mag 7 stock lately has probably been Facebook. Facebook came out early in the week and said how they were going to tighten down on some of the what teenagers can see on both Instagram and Facebook, and I think that could drive more users, which might have been why it had such a nice week. But just going right back really quick to this Mag 7 composite, I took all of the Mag 7s, put them together, and divided them up. We had a false breakout at one point yesterday of this right below this trend line at one point. So I put false breakout, but then we closed a little bit higher. But pre-market, you can see that it is under here at the moment. So, there's potential for weakness, I believe, but this market's been so strong. I'm interested to see how PPI comes in. And I think it's important to note we have a holiday on Monday. If PPI comes in hot, just like the data did yesterday, who wants to sit long in stocks over the weekend into a holiday? If we continue to roll over a little bit, and vice
Especially
versa.
with all the geopolitical risks that
Especially
are
with the geopolitical
surfacing.
risk, yeah. And vice versa, if it comes in weak and stocks start bidding back up towards those highs, I'm going to get out of the way too. So I think this data will be important because it might seal the deal on a couple of things. Really quick, just on the currencies, I got short euro yesterday. Dale, you talked about that spike. I got extremely lucky. I had placed a short right underneath it. That one tick did me some justice. But really what I'm looking for is a break below this 38.2. and this ascending channel support. So if we can get back below, call it 109 or so and hold, I'm going to be pressing my shorts. And I'm also doing something similar in the Aussie. I took a short Aussie yesterday. You can see it's sitting up against this support right here in a pretty similar ascending channel. But the big level for me is going to be 66.40, that 38.2, and this longer dated support. So we can get back below there. If risk is rolling over, I'm gonna be pressing my Aussie short, and hopefully that'll kick me off with some positions for the new year. And that's all I got, guys.
Nice. Thanks, Nick, for bringing up all those charts. And yeah, I mean, I want to talk currencies too,
I'll go
because
ahead.
I'll take over here. We got about 10 minutes before the data comes out. As you're pointing out, like the Aussie, for example, you know, this is a 618 retracement and the 38% retracement. As you pointed out, the 38% retracement, it's also a 618 of the last leg higher. So, you know, when you're dealing with the Aussie and you're dealing with like geopolitical risks, and you see copper's, you know, starting to show some signs of weakness. You know, stocks up here, as we discussed yesterday, they've been rallying, yet you've had zero response out of the Aussie. The risks are now starting to tilt to the downside. Yesterday, yeah, we didn't have enough to get us out of these ranges, but if we get the 1-2 punch, because you know, producer prices today is going to be the, you know, a factor of how the market you know, is calculating PCE expectations. So if we get like the 1-2 punch today and you see producer prices, you know, a little hotter, you're gonna get some dollar sellers that just say, you know, forget it. I'm not gonna be short the dollar or selling dollars ahead of what could be a very eventful weekend with geopolitics. So you're right. I think the Aussie looks vulnerable. The euro, as you pointed out, you know, right here at the 38% retracement, really important support as well. You know, we got about 8 minutes before the data comes out. Sorry, guys, I'm gonna pass it over to Ryan. Ryan, what are you looking at today going into the data?
I'm looking for, got to look for a bit of volatility in this PPI data. It can be a more volatile number. If it comes in and around expectations, it's probably going to be a bit of a ball fest. But this has the possibility of, you know, adding to or taking away from what we saw from the CPI yesterday. As mentioned, as I said yesterday, and Dale mentioned it at the start of the show, you know, we keep getting these data points. They keep moving the markets, but we're not breaking out of anywhere. And I don't think the PPI data is going to do that either. But watch for those moves. If you get tests of these range edges, it gives you something to lean against.
Like the cable was, that was a great example. I mean, we had stronger UK GDP, right? We had decent data, and we saw the cable slide. Now, I think that was more dollar related, but still, it was, you know, the top of this range that the pairs struggled with, right?
Yeah, as I said yesterday, you know, look at, if you get volatile moves, look at where we close, and you look at all the pairs where we closed, bar dollar yen, which is a bit out on its own because of higher volatility, but euro dollar, cable, they all had a little move over the CPI and then came back right where they started. So it doesn't matter what we're going through at the moment, nothing is changing or kicking us out of this consolidation phase, this sideways action. So you got to think, what is going to kick it out? It's going to have to be some big data or a big shock event.
Well, you know, one of the things I think should have everybody's attention right now is this move in crude. And we've seen crude oil come out of this triangle today. We've been consolidating in this triangle literally for like the last month. And, you know, obviously we're around some pretty critical levels of support in the high 60s. Couldn't really get below 70. And now here we are because of the, you know, the UK US coordinated attacks in Yemen. It's allowed for a bit of a move higher in crude. You know, think about those inflation expectations moving forward. If crude starts to, you know, trade up towards the 200 DMA, which is around $78. I mean, you know, energy is cheap right now. I know we're in a political, we're in a election year, but you can't really you can't really stop the bum rush if there's some risks starting to surface around the world. So anyway, I think crude's worth watching at these levels here. Kman, as we go into this data, and I know you've been out for a couple of days, what's hot on your radar right now?
Well, I think if the number comes in weak, let's put it that way, then stuff like gold could put in another rally, perhaps. Perhaps dollar yen getting back to 144.5 closer. But really, I'm already looking at that weekend. If things come in line, I think the dollar will continue to just listless hover around, and we are going to look at geopolitics. What I'm actually a tad surprised about is that you were talking about the sterling coming back down, but then since it was coordinated strikes, I don't see sterling suffering more than any other currency versus the dollar. Perhaps I would have said, okay, geopolitical stress a little bit worse for the sterling, but it's just moving in line with the rest, so that the market seems to ignore. Risk also not on the FX side, not coming really through. Dollar yen is bouncing a little bit, dollar Swiss not really lower, and even like risk crosses like EUROMEX or so are not moving higher, on the contrary. So FX has not been trading that risk bit yet, but it may all of a sudden kick in next week if something bad would happen on either side of Asia, Middle East or so.
Yeah, so we got what's happening in the Middle East. We've got Taiwanese elections. We have obviously China, which could be loosening monetary policy come this weekend. A lot of moving parts.
Exactly.
A lot of moving parts. All right. Well, K-Man, welcome back. I know you had to travel for personal reasons, and it's good to have you back. Dale, we got a couple minutes till the data comes out. Anything you're thinking of right now?
I'm hoping the dollar follows through so that could get the long entries, or go for a stop hunt in euro over 110. Otherwise, wait for 107. I'm not short, so I'm pretty flat here. Blake.
Okay. All right. Well, I'm still maintaining euro dollar shorts from higher levels, and I keep putting orders out around the 110 level every night this week, and I have not gotten tripped. And this order right here is the one order that my order expired just before we spiked up there yesterday. So anyway, we'll see. We'll see what happens.
Think about the action since when was this? The 3rd. So it's been like 6 trading days of this.
Yeah. I mean,
which is nothing. So I guess that expresses my neutrality right here. I'd like to buy it down here, or to ride up to 104.80 or so. But or euro, I would, if it broke over 110, that's where I was looking to short it, but I don't think it's got it in it. It looks like a flag, Blake. I think you're right to be short. And
well, we will
break down
see.
Here.
We're gonna see what happens here. With
what was
the
this? 250 pip move here. So
what's that?
200. This was a 250 pip move. So from 110, that gives you 107.50, which is wave 4 of lesser degree. That's
all right.
I'm a buyer.
Got it. Well, PPI data is coming out in literally about 30 seconds, guys. So heads up. We got the euro to the left, S&P right in the middle, 10-year yields off to the right, and here comes the data. Let's see what we get here, and let's see how the market responds. So all right. 10 seconds, guys.
minus 0.1% month-to-month for PPI with
UPI worse than expected.
Yeah, 1%. Core worse as well, 1.8%.
Yep. So it
So
looks
a bit
like
of
we're
the
going to stay in
opposite.
our ranges.
Yeah, it's a bit of the opposite of what we saw in the CPI.
Yep, man. So the PCE is going to feed in a little bit lower and more range bound activity for us. Woohoo. That's so not exciting. Damn. Well, let's see how we get a little first of all, I don't want to work into Pedro is DaCosta is here to meet with Dale, and it's nice to have him here. I guess what we're going to be doing is watching these damn ranges. Let's see what gold's response has been, because gold has acted better. Yeah, it's a little higher. We're right into resistance. This 2050 is pretty key. So watch gold. Gold could really firm up going into the weekend. Stocks are liking it. So, all right. Well, with that being said, I want to say thanks everybody for hanging out with us. Make sure you check out ForexAnalytix. Jump in the chat rooms with us. You'll find Kman, Ryan, myself, Nick. We're all in the chat rooms chatting all day long. Excuse me. Gosh, guys, sorry. So, here's our chat rooms. You can also jump in the trader funding program. That's a great way to be part of the ForexAnalytix community, because if you try to pass an assessment and you want to be, part of our community, we include you in there automatically in the trader funding program. So this way, if you're trying to pass an assessment or you're trading, our capital, we want you inside of our community for a certain period of time, depending on what type of assessment you take. So check it out. And I want to say, guys, gals, have a great weekend. Dale, thanks for guiding us every week. Really appreciate you.
Well, thanks, Blake, team, K-Man, Ryan.
Thank you,
Cheers,
Dale.
mate.
Thanks, everybody.
Have a great weekend, Warriors.
You too, mate.
Have a great one, everyone.
Yeah, thank you, Nick. So, Pedro, I think I had promoted you. Let's see here.
I don't
Let
see
me
him
try
over there
to
just yet, but
promote the panelist. Okay. Okay. There you are, buddy.
all right.
Yeah,
Have a great interview, guys, and welcome,
thank you.
Pedro.
Thank you. Here I am. How are you guys?
Happy New Year.
You too, Dale. How's it
Yeah,
going?
great. Good. Great to have you here. We had a couple of schizophrenic inflation reports, but I want to know, we're a week or so into the new year. What's top of mind for you, Pedro, as we enter this year of 2024?
Sure thing. So one of the reasons I love this beat is that whenever I think things are about to get boring, something happens and it gets exciting all over again. So I started off the year thinking, what are we going to write about? They're kind of on hold for now. But as you know, the market has almost immediately flipped from, the Fed's implicit declaration that it's done hiking to the timing of rate cuts.
Yeah.
And the Fed introduced another little wrinkle for us in the minutes of the December meeting, which was that they're going to start debating the pace and timing of a taper to quantitative tightening. So those two things are top of mind for me. One of the things I'm paying close attention to is this weird contradiction where the less hawkish the Fed becomes and the more it's willing to embrace the soft landing story, the more it kind of risks reigniting inflation because, as you know, financial conditions loosened considerably after the last meeting. And despite some effort to do some job owning to push back, markets are still pretty hung up on a likely March cut, and markets, might be even kind of elbowing the Fed into doing that. So I'm watching for the prospect of some reacceleration in inflation early this year, and I wonder. I think there's going to be a big split within the FOMC about whether or not to begin in March. I think some people are eager to start in March. There is a dovish core that has kind of gained the upper hand in recent months and weeks as the hawks throw in the towel, and it's going to be the year is going to be about kind of reconciling the market's fairly dovish expectations and the Fed's desire to at least say they're staying higher for longer.
Okay, so do you think there's a good chance that the 10-year troughed at 380? and that we're going to start to see yields begin to creep higher again?
I do.
Okay.
And another reason I think that is the fiscal picture hasn't really changed, and that has been one of the key reasons for that, for the increase that has since reversed. So I don't see us going, very far below the recent lows. That's for sure.
Okay. There are some guys that think that we're going to sometime this year trade above the 5% level. Can you think of what conditions? I think first we have to transition from, do we still have 6 cuts priced into the market, even though yesterday's number was a little hot?
Pretty much. I mean, the market
Yeah.
gave up some of its pricing, but it's still more than a 50% chance. I think it went down from like 80 something to 60 something, but it's still a
Okay.
preponderance.
And this is for March,
That's right,
for a
for
cut in
March.
March. Okay.
Exactly.
All right. Anything that we should really be keeping an eye on? I know your bailiwick is financial stuff, but it's hard to ignore geo stuff that turns into financial stuff like shipping
Yeah, I
and
mean, it's
supply
pretty,
chains.
yeah, it's a pretty shocking turn of events overnight. I mean, not shocking from this, from the standpoint of predictability. The U.S. had been warning about these possible attacks on the Houthis in Yemen, but I think it's kind of ironic. I keep hearing on the radio and in various news outlets that these attacks by the U.S. and the U.K. could lead to an escalation, when in fact, obviously, they already represent an escalation, right? And
Yeah.
we see that reflected in the energy complex. I think
Yes.
that is one big potential source of, renewed inflation. And there's
Okay.
also a kind of a deeper issue. I went down to Richmond yesterday to cover a speech with Richmond Fed President Tom Barker, and he spoke to reporters afterwards. And we had a pretty extensive debate with him about, the idea of R-star rising and the neutral rate rising, and the idea that we've entered a new inflation regime. And he pointed to several factors that, I think he said basically that you don't have to squint too hard to imagine that we've got some risk coming up. He cited everything from deglobalization, from large retailers and others changing their mindset around the trade-off between price and supply security, the issue of demographics. So all of those forces, like labor force growth and access to offshore labor, that had been fueling the low inflation period of the last 20 years,
Yeah, going
could
away.
arguably have gone away. So
Yeah.
even after we get over this initial hump of this surge in inflation, we might be kind of stabilizing or plateauing at a higher level. And that's going to be a concern for the Fed. You mentioned financial issues. And one of the things that's kind of I'm paying attention to also is the Fed's bank term funding program expires in March. Of course, that was a very successful program from the standpoint of ameliorating the regional banking issues, but you could argue it was also a Band-Aid that just kind of kept the financial stability turmoil under wraps.
Yeah.
And the Fed is going to have on the one hand, it would probably like to extend the program because it's worked out well, and and it doesn't want to rock the boat. At the same time, it is a program that's undertaken under kind of emergency authorization, and it requires an emergency. So to renew it would be to admit that the banking sector is still kind of in an emergency, in an emergency state, which
Yeah,
is
that's
probably
interesting.
not the case. And it might be kind of self-fulfilling. So we're watching again closely for what kind of decision the Fed's going to make. They have to decide that within the next 2 months, because
So here's
program
the
expires in
epicenter.
March.
And the regionals even look great.
Yeah.
So I mean, this doesn't look like an emergency.
No, it certainly doesn't. And in
Right.
fact, the Wall Street Journal had a nice piece about how the banks are actually kind of gaming the system a little bit by because the way the program works is based on sort of expected rates. They're kind of arbitraging the rate at which they had locked in the program and the rates at which they can now borrow. So,
Although if I break out my telescope, Pedro, and I look at a weekly chart and then look left, this is a pretty interesting area that KRE has stalled out at. And maybe there could be a problem. It's not bullish unless it pulls back and then blows through these highs, technically.
Yeah.
So pretty interesting time for them to be considering ending it. I don't know if I'd want to be long regionals into at least, part of that ending phase.
And
Maybe that's
it's kind of related to QT, right? Because it's all about liquidity in the system. And so the fact that they're already discussing ending QT when they had previously said, we don't have to think about it anytime soon, suggests that they don't want to get anywhere near close to the situation that occurred in 2019, where there were wobbles about QT that forced the Fed to not only halt it, but to actually start buying bonds again.
okay. You have any views on gold, or write any stuff about gold? It's becoming, besides Bitcoin, we're threatening all-time highs here. I thought we might get a pullback into this range, but today's action, it's a process getting different information today. You have a view on alternatives to fiat like gold and Bitcoin, Pedro?
I don't have a firm view on it, but I think they're, the recent strength in those assets kind of reflects the level. I think that speaks to the geopolitical side that you were mentioning. It speaks to the level of geopolitical uncertainty, because the whole basis for the US as a reserve currency, and for the dollar to be king, if you will, is kind of American military dominance and might. I think it's like, when bleep hits the fan, what do you want? What denomination do you want your assets in? And so I think that the undermining of the geopolitical order that seems to be taking place before our eyes on so many fronts, whether it's Ukraine, whether it's China, Taiwan, whether it's Israel and Palestine, that is kind of the basis for that strength. And I don't see the uncertainty going away anytime soon. And the other factor that seems to be very challenging for the US is, to be honest, it's the first time in my 20-year career following the bond market and the Fed that there seem to have been kind of genuine market moves in the bond market related to worries about the US ability to sustain its debt. And it's not just the ability to repay, because obviously we can repay. We are, a fiat currency system, but I guess it's the political will, as well as the deterioration of our political risk outlook, and the fact that we are becoming emerging market-like in terms of our institutional decay. I think that is the kind of thing that strengthen the types of assets and alternatives that you were discussing.
Okay, yeah. So we'll see that be tested again next Friday. I believe there could be a partial shutdown.
I think that's right, but my sense, and this is not my bailiwick in particular, but I get the sense that they're going to come around to
a deal.
To a deal. But again, it's really the erosion of trust that comes with these repeated incidents, right? And the lack of any plan from either party to reduce the deficit in any way, which, by the way, is also a major inflationary force that the Fed kind of ignores at its own peril. And one of the fascinating things to me in terms of watching the Fed has been the extent to which this Fed has almost gone too far in the direction of never discussing fiscal policy. It's one thing to avoid fiscal issues because you don't want to step on Congress's toes, but it's another thing to not even factor it into, to publicly factor it to how you're thinking about your macroeconomic outlook. And that's partly what burned officials in terms of their missing the inflation surge and thinking it would be transitory. And I fear that this could happen again, that the ongoing, fiscal impetus that we have in the economy could sustain inflation in a way that policymakers catches them off guard.
Yeah, it's interesting. While you were saying that, I just flashed back to the Great Recession and Bernanke saying, well, the Fed did their part but I'm concerned whether or not we have the political will to follow through, which meant fiscal stuff, right?
100%. He was very willing to call for that. And in fact, I think one
Yeah.
of the reasons that Powell is actually now circumspect about discussing fiscal issues is he got burned a little bit by supporting the fiscal stimulus, you know, by earnestly supporting the fiscal stimulus that ended up leading to the inflation. So
Right.
I think that led to some internal communications decisions that maybe it's not great for us to be making these kinds of statements. But again, that might have been taken too far in the other direction, in the sense that we hardly ever hear the Fed acknowledge that fiscal policy is actually working at cross purposes with monetary policy.
So is Paul Arthur Burns now?
I don't think he's Arthur Burns, but I'm glad you asked that. But I definitely don't think he's Arthur Burns. I think he's very, you know, I think he's definitely resolved to ensure his legacy is not that of Arthur Burns. But he's not Paul Volcker either, right? And
No,
we had
he
the
isn't.
sense that he might be after his 2022 Jackson Hole speech. He was very stern. He cited Volcker several times, and I honestly got the sense that he was a kind of a changed man, and he'd seen the light, and it was really just going to be a one-sided mandate kind of chair. But he's become a lot more balanced and, you know, a lot more willing to accept, you know, to his credit, you know, if the facts change, right? But I also fear that this willingness to publicly embrace, you know, a benign scenario, again, pushes us away from that scenario, because it leads to inflation expectations potentially again becoming unanchored, and it leads to people, you know, to consumers and businesses who've already become accustomed to inflation being an issue for the last 3 years, potentially expecting more of that down the pipeline.
Okay. You know, this too might be outside, but you know, I just think that all of these things are kind of coming together of, you know, like incompetence, like a defense secretary going in and under anesthesia and not reporting that he was going to be, you know, out of pocket for 2-3 days. Kind of erodes the confidence in America, doesn't it?
I think it does. I think it is this kind of I mean, it's honestly kind of inexplicable. I still don't fully understand that story. And
Yeah.
again, the lack of a reasonable explanation leads you to believe the worst, I guess. And yeah, I think it's a general loss of confidence in our institutions, in our ability to work together. You know, it's a cliche that America is a divided country, but I think when we used to say it in the 90s and the early 2000s, you know, we had no idea just how divided we actually were or would become.
No, no. And what kind of message is it to both our allies that count on us and our adversaries that are looking for weak spots?
Yeah, I mean, the message is that we don't need to do any work. They're destroying themselves from within,
just
right?
sit on it. Who said that? Well, who was the communist leader that said?
I
Khrushchev said
forget.
that,
I think it was
wasn't it?
Khrushchev, right? I think that's right.
Yeah, yeah.
Exactly.
So,
And it's, you know, I think Putin is sort of sitting pretty, already watching Ukraine aid, you know,
yeah,
wither, and just
right.
saying, if I just wait this thing out and there's a Republican victory, then I might be able to just, you know, call it a day and, you know, say that I won the war. And so that's just one of the many theaters of conflict that we're now engaged in. So
Yeah, it seems like all levels, politically, financially, geo, it's on multiple levels. So, do you have a view on the dollar with everything we're talking about, Pedro? Will the dollar be the sacrificial lamb to inflate our way in a Burnsian style? Lower dollar, it also would support your reflation view, which is also what happened in the 70s. We had, I think, 3 rounds of inflation spikes with pauses in between them. So maybe this was just spike 1, and now we've had the respite of it, and then we get spike 2 coming up, and a lower dollar would definitely not help the cause of inflation, would it?
No, it wouldn't. And I think that is the big fear for the Fed, is a repeat of the 1960s and 70s, which they themselves have warned about, would leave them in the worst possible position. And in the short run, I think that's what could lead to a sort of reacceleration of the spike in yields in the 10-year, for instance, is if suddenly we get to the middle of the year, inflation has plateaued around 3% or has even spiked from these levels for some reason or another. And then rather than talking about cuts, there's some Fed officials considering an additional hike. That would really, that talk about the level of market reset that it would take to go from pricing in 6 cuts and all the expectations that go along with that to having to start to ponder potential additional hikes. I don't think that anybody in the market is anywhere near ready. And that might be the kind of shock event that could really send us into a harder landing scenario. So what that does to the dollar is more, is more your world, and I'm open to your views, but because there's too many dynamics for me to factor in, but that is their fear and that is my fear. So
yeah, and I don't want to be political about it, but the stock market, has been great. So, it's there's people that have targets sharply higher, that we're in a melt up, and S&Ps are going to 5,200, 6,000, even 7,000. I think the point though is if we accomplish this, melt up means it happens in a hurry, right? And we tack on most of the gains for the year into the first quarter or into the summer. I think it's a direction of where the market is going in the summer that's going to decide the outcome of the election.
That's a very good point. And also where we are in this conflict, right? How involved are we? Are we at the stage of like America rallying around the troops, or are we at the stage of America bemoaning, wayward engagements in the Middle East? It's hard to know.
Yeah, I think that we, seems like Americans, especially after Afghanistan for 20 years, are pretty tired of it.
I think so too, and I think, that's what Joe Biden was supposed to stand for, moving away from that, right?
Yeah.
I wanted to mention, you mentioned the stock market melt up. These stats from Torsten Slok at Apollo. I don't know if you saw a note earlier this week, but it's talking about the magnitude of the AI bubble. I found it fascinating, and I'll read it to you guys. So the market cap of the Magnificent Seven is now 4 times the market cap of the entire Russell 2000. Okay. And then the market cap of the Magnificent Seven is the same size as the market cap of the stock markets in Canada, the UK, and Japan combined.
Yeah.
Pretty stunning numbers. And I don't know where it goes from here, but.
Well, I think in the movie, most of the Magnificent Seven, they were shot, weren't they? They end up on Boot Hill. And actually, they're underperforming a little bit, but so he's comparing this to like Nifty 50 on steroids with the Mag 7, right?
Yeah.
We know what happened to the Nifty 50.
Exactly.
So, that's a great word of caution from you, Pedro. And, we've been talking for years, and, I want to take the opportunity to thank you for taking time out of your day every 3 months or so to come and talk to us and edify the F.A.C.E community. Really appreciate it.
And I really enjoy it every time. Great questions.
All right. Well, great conversation again, Pedro, and everyone, you could follow him. It's at MNI, right? .com for your articles.
Marketnews.com is the website. Check out my podcast, which is called Fed Speak. I recently had the likes of Jim Bullard and Esther George, former Fed presidents, on it. Yeah. Always some top-notch guests. So
are you a tough interviewer, Pedro? Or do you throw a lot of softballs?
These days I try to stick to macro. Let's put it that way. I'm a
Okay.
tough interviewer when it comes to macro and policy issues, but
Okay.
I don't veer too much outside of those topics in the
Oh.
podcast.
All right. All right. I figure you're too nice of a guy. Anyway, you have to,
It's
have
not that
a
I'm that it's not
having
that I'm
that
nice, Dale. It's that I've learned my lesson over the years. These are
right.
if you want to stay employed, you got to have repeat engagements, and so
Yeah, you're right.
you
You're
can only
right.
be
I've learned.
you can only be so tough a couple times, and then then you
Yeah,
run out of
I mean, I've been hit with a ball peen hammer on the head a few times. I'm still trying to learn that it hurts, So
exactly.
anyway, I hope it's a great year for you and all your associates and people that follow you and your family on all levels, Pedro, not just reporting. Hope you get the scoop of the year.
Thank you
And
very much.
there's
I'm working on it.
and a
Let me
Pulitzer.
mention one more thing, which
Go ahead.
might be of interest to your listeners, which is that Em and I recently hired. I'm very excited because we expanded our coverage to Latin America, and we hired a very very smart reporter in Brasilia who's covering the Brazilian central bank and the Mexican central bank. So
Wow.
as the importance of these economies grows, we are paying more attention to them, and I'm very excited about it, in part because I'm from Brazil originally, so it's nice to be paying some attention to
I just read an article a friend of mine sent to me that the strong peso is hurting tourism there because everyone had this concept you could go to Mexico for an affordable vacation or to live there. That's changed.
Yeah.
Or changing. Yeah. Okay. Well, thanks again, Pedro. Have a great weekend, buddy. And
Thank you all.
I'll be in touch and we'll talk again in the spring. Okay. See
Sounds
what's
great.
happening then. All
And
right.
here's
Pedro
to
DaCosta,
prosperous
everyone.
2024.
Yeah, and follow him on X at P DaCosta. And he's a great source for keeping on top of central banks. Great publication he's with, and Pedro's stuff is top shelf. So that's a wrap for the whole week, everyone. I hope we added value to what you're trying to accomplish. We try and build up and edify people every day. Have a great weekend, and we'll be back. I believe, I'm not even sure if we're going to be here Monday or not. I'll ask Blake. Have a great weekend. If you're in the US, have a great holiday. Adios.